Morning, ladies and gentlemen. This is Greg McCloskey, and this is New York Opening Forex Commentary for the customers of FXStreet, brought to you by Greg McCloskey and FXDD. Let's take a look at the markets here, and we'll start off. I'll take a look at actually the euro on a daily chart. And what I want to do is I'm going to zoom out here, and I'm going to show you that we've been in this channel here for the euro versus US dollar, coming down nice little bottoms along here, nice little trend line to the downside, nice little topside trend line here as well. Last week we did break below this channel trend line at 125.69. Today we have the trend line coming in around the 124.78, maybe 80 level, and that's where the market is currently trading at 124.83. So from a technical perspective, are we going to have another repeat of last week where the market failed on the break below this trend line and then starts to move back to the upside for a correction here? We've had 1, 2, 3, 4, 5 straight days to the downside, so it's going to be a key, but the bias to the downside remains the bias remains to the downside for the euro as a result of concerns about growth, concerns about the viability of the EU going forward, and squabbles between things like France and Germany as well, starting to weigh on that currency pair. So from a technical basis, we are going to watch this level here today, see how everything squares up. If you take a look at the 5-minute chart, I'm going to go to the 5-minute chart. I'm going to put a Fibonacci from the high to the low of today's trading range, and we to look for resistance levels on the top side coming at 125.03. This is a 100-bar moving average that's going to come in around 125.10-ish currently at the moment and starting to move down. So I do expect that we're going to see on rally certain at least sellers against those levels as the bearish bias continues, and that certainly should attract some sellers in the euro versus US dollar. We also have resistance at the 16 level. I think a move above the 16 level might be the end of those thoughts, and that might be as a result of some short covering rallies as a result of the weekend coming up and squaring up positions. You can see how that 16 level is going to be of importance because we have a number of different lows there before the market was able to break below that level, come back up, test the 100-bar moving average up here, fail at that, and then move back down below the level and start its trek to the downside here during the London session. But we are rebounding, but look for sellers. Look for sellers in this area up here at around the 125.03, if not before that level. Let's take a look at the sterling versus the U.S. dollar next. And from this basis, if you take a look at the hourly chart, we came down and tested the lows really from last week. Last week's lows came in at the 144.74 level. And if you look at the this channel trend line here on the bottom side of it, comes in at 144.79. Now the market low only came in at 144.95, so we had some earlier buyers against probably stops below that the bottom low, the low from last week, and the trend line support, and that is helping the sterling recover a bit here. Yesterday's closing level came in at the 146.12 level, and that might be a level of interest on the top side. Also, we have the top of this trend line channel coming in at 146.31 on the current bar. In another couple bars or whatever, it's going to be coming down to 146.19.25, so on and so forth. So draw your channel trend line, or at least the bottom trend line in here, and I use this top here. I discounted this top here as a resistance level on the top side. We'll see how that all pans out off the hourly chart. On the 5-minute chart, we are running into some resistance here against the 200-bar moving average on this 5-minute chart. Comes in at 145.87. So for a shorter term perspective here, if we're not able to get through this 87 level to confirm the move to the upside here on the break of the 100-bar moving average, if we're not able to get above there, then the markets will likely come down and move back below that 100-bar moving average, and look for support against a 50 level. Also look for support against this floor here The floor that was earlier in the day comes in around the 145.34 level. Notice how we use that floor. We broke through the floor here, came up through the floor, and used it as support again here. So that this level right here is definitely going to be our key support level on the downside for the sterling versus U.S. dollar. Any move to the downside below this line is certainly going to be something bearish. So these are really my key levels here for the day for the sterling versus U.S. dollar from a trader's perspective. Let's move on to the dollar versus Swiss, and what is significant here is we're above the 61.8%. What's that of? That is of the range of the move down from the high of 2009 to the low of 2009. The market came up to that level last week or a couple weeks ago, I guess, maybe the week before. We broke through that 111.84 level, and I'm going to zoom in here just to give you a show. The market broke through that level, moved up above the upper trend line, and then failed. We actually closed below the 111.84 level. And then the next day we stayed below that level and moved lower. Yesterday we came up, tested that level. Today went up and broke through. We also broke through this top trend line, this channel trend line that connects that's parallel to the bottom channel trend line, and that happened at the 112.44 level, and currently trading at 112.20. So where do we have support? Obviously 111.84. Where do we have resistance? 112.44, 48 type area. And let's use that as our key levels here for trading today. If we break below, break below or break above any of those, we should see further momentum to the upside. For the dollar versus Swiss right now, trading right in between those two levels. So I'm sorry I can't give you any clues as far as what to do right now. It's all up to you, but keep those levels in mind on the 5-minute chart. Or this is the hourly chart. I put a line in at 112.46, put a line at 111.84 down below, and you can see how that 84 level on the top side really held the top side here today. And then when we broke through the level, it started its move to the upside. See it even closer on the 5-minute chart here. How's the market use that level as a resistance, broke through the top side, came back down and moved to the upside there. So it's not a surprise to me, but pay attention to that level going forward. Let's take a look at the dollar versus yen, and the key chart that I want to look at is the hourly chart and the floor here. We have a floor here at 92.23. We have resistance here against 100-bar moving average. The 100-bar moving average comes in at 92.90. We had one bar that went above that here today and failed. All the other bars have been below that 100-bar moving average, and we have a couple bars that came down, tested the 92.23. If we move below that level, we should see lower levels or some selling pressure in the dollar versus yen with a target of 91.46. If we move above the 100, then move above the 200, we could head up to toward the 93.63. So this is the key levels that we'll be looking for here today. We are of course trading in between those two ranges right now, so there's not really any necessarily bias off the hourly chart. Let's go to the 5-minute chart, see if there's any clues from there, and we can see that we are in the last 15 or 20 minutes went up and tested the 100 and 200 bar moving average on this chart. That 100 bar moving average currently comes in at 92.66. The 200 comes in at 92.68. So from a trader's perspective, short-term trader's perspective, you can maybe look for either a break of the upside, which should lead it to higher levels, or if we stay below this level like we are doing right now, we could, if we break this low here, matter of fact at 49, we could see the market start to move a little bit lower and go back and test that 25 level on the downside. Dollar versus Canada is being hurt. Canada dollar is being hurt today on the back of lower oil prices, lower growth, global growth, leading to lower oil prices, and we are testing the 200-hour moving average currently at the moment. You can see here this line has held for the last four hours here. Comes in at the 102.67. We're actually trying to break above that trend line currently at the moment. I'm going to zoom in here. Take a look at that. You can see here that, well, let me see here. Can't get it there. 102.68 is a 200-hour moving average. A break above that moving average with momentum should see higher momentum with a possibility of a move up to the 103.51 level. What does that line represent? That's the 38.2% retracement of this last sharp move to the downside here. 103.51 is a key level on the downside. If this level holds and the market starts to come back down again, the 102.07 level is going to be our level of support for that currency pair. Let's go to the Aussie versus US dollar. And what is of significance here is that the market still continues to try to figure out which way it wants to go, above or below the 200 day moving average this week. Each of the days this week traded above or below it. We had, but no closes above it. You can see that we traded above here, closed down here. Traded above, but no close today. We use that level as resistance. That level, that 200 comes in at 89.72. The high for the day came in at 89.73. The market is now trading at 89.14. Pressure in the Aussie versus US dollar also fell below the 100-hour moving average. Fell below, came down, tested this trend line here on the downside. Test, move below it. Finally get a close below it, and then starts move to the downside. So we have support down here at the 89 or 89 level. Also support. Down here on this bottom side of this trend line, which comes in at what is that? About the 89 level. So good, look for support in the Aussie versus US dollar at the 89 level. If we break through that, look for a test of these lows for the week, which came in about the 88.87. This is Greg Michalowski with the morning commentary for FX Street. If you have any questions, send me an email at greg@fxdd.com. Thanks a lot. Good luck with your trading today. Talk to you later. Bye-bye.